So I've got a linear ATR indicator set up here, which is every 10 pips I've marked off on a 1 period ATR. The only way to run it, in my opinion, because you can always draw your trend lines on here. So here's 20 pip floor. So if you're breakout trading the $CAD on the 4 hour, you're just getting in these windows here, and you just have to size your stops off of this. Those are your scalps. Your scalp. Here you get a little trapped here. Here you made a ton of money getting in on this break. And here's, you just got to pick your spots. Here's another, not the best trade in the world, but you know you're coming back to the floor. Typically the structure is going to rule the day, but if you want to mechanically trade, there's your stop entries, breakout. You don't need to look at the ATR, I suppose, but if you want to have some type of, here's a trap, a little bit of money. If your larger stops, you'd have to trade more than one position. Got filled, then you totally made money. But yeah, looks like it. I'm going to pull back here. We're just going to keep going up. I'm going to finally fill that hole on the north side. So this is the big vacuum I'm waiting to have filled. But in the meantime, you have to pay the rent. So the fact that we came back to this, no real surprise there. You want to buy at the 100 always. So all your orders of hand plays are always going to be at the hundreds, without regard to the volatility. Here's 100 sell to make 50, 100 to make 50, 100 sell to make 50. I mean, that goes on and on. Buy at the 50, get the 50, buy at the 50. And your entries are going to be here. You know how to, you're going to risk 30 pips to make 50 pips, right? This to make that. This is getting rambunctious, and right here you're running the tighter entries now. Buy stops. If you're bullish, you have buy stops, but you have a cluster of buy limits based on this ATR, because you know that you can run 30 pip stops on all these buy limits. Because this is you can see the markets on the 4 hour basis can spend at least 8 hours in a 30 pip zone. It's not unusual. If you go to daily, I put in 200. As soon as we go past 100, I have 200 pips. And here's the 500 pips on the weekly. So you can see we have the insane 500 pip weekly range. And for the people with really wide stops that start at 120 pips, they're getting in on these breakouts with 120 pip stops. They're cleaning up whether they know where the market's going or not, if they have exits that are looking to make 1, 2, 3. So we know the market's had this amount of volatility. We can expect targets to be in the 300 pip range with the 120 pip stops. So you can just build your targets off of this ATR also, because so if you have a stop here, which I can't imagine running a 150 pip stop, but I'm sure people do, and they're looking to get out here, they're looking for the low entry window here. Now this was, this is 100 pips in each line up here, so you're looking just for it to make 100 pips. The distance from the last known volatility range here, if you're selling, you can jump on the train with a 300 pip stop here, looking to make the next big move down here. And then this was probably the most quiet zone to get in on what's probably going to be a sneak away from here. Dollar goes up, gold goes down, crude maybe just treads water. If we ever make it above this, stand aside. I think if that's quite a price up there. And just, but of course, there's people that live on the smaller time frames. Of course, this is a lot less risky if you can babysit the market. You look at the 1 hour, And here you can see you can run 10 pip stops on these entries, looking to make 30 pips. Your targets are smaller. Here was a breakout trade that backlashed in the end, but here's 10 pip window entry, and you made your it's like 100 pip. This is the big down bar, so you only made 20 pips on that before they reverse. So you have your hand placed sell limits up here. So now we're going to get in here below limits. So limits coming in like this. Definitely here. This has got to hold. Your breakout bots are loading on stops right now, looking for, if you're bullish, you're just going to run the buy stop side of that, or just buy every hour at the market that the ATR is another thing. You just buy and sell at the market every time the ATR is at a certain thing. If you directionally trade, this is an incredibly low ATR here, but that's your spill out window. But this time frame would matter. And then of course if you went to the really drilled down to under 10 pips, if you're on the 15-minute chart, and you can see the ATR here is really the only people making money here are people with targets that are really shallow targets. So your first spike in ATR, you're looking for a drop in ATR to get in, and people probably think that's a continuation situation. But if you just keep on plugging away on the 15, eventually your sell orders are going to rule. You're always going to get chopped if your stops are too tight, but if you're just going to only take, like I see here, this is 10 pips, you'd have to dial that down to a finer, or just zoom out. You're scanning for the contrast between days here. So this day, in this whole day, you never went past 20 pips on any 15-minute bar. So something's going to happen. Something's going to get crazy. And on the 15-minute, you can even see the internal double bottom becomes a top, becomes a bottom for your limit orders here. These are the almost guaranteed low risk trades because your stops can be super tight on that. You can have stops that are on this, and you're looking for them to trap the just before the news. This is the trap. Then blammo. Huge winner off the 15-minute closing prices. If we go to half hour, it still holds up. Don't have to. The nice thing about closing prices is always dead nuts on between the 1 hour. Not so much. You only get this doji. Look at this half hour. Then I got the monster 300 pip. After we pass 100, we go 300. So dollar CAD off to the races. We're about to fill the hole on the north side. For God's sake, finally. Break out of this trend line. Pull back. Almost the perfect setup for a big launching pad. Real trap for the breakout traders here. And they didn't quite break out, but next week's going to be the big testola. And can we get out of this trap down here? So if you think the trend's up because of this trend line, getting in here was, you're still holding if you're long this thing. And can this thing triumphantly march through out into the wilderness to the north here? And don't forget, Canada is in the north, so this is going to be another reason to really load the wagon. Well, of course, you're always going to buy at this fair value re-dipping zone because there's plenty of fortunes to be made every time we come back to the hundreds. So we could come back to that 100. We could retest this, for God's sakes, but something's wrong. Something's up. And so God's sakes, I don't know what the all-time. Yeah, so you take this out. Next target's going to be up here. $1.51. $1.50. That poor dollar CAD. So maybe the wheels are going to come off this puppy to the north side. Finally. For all the people that bought up here, I'm sure that definitely a good place to take profits. Let me retest that high though.